Imagine buying a stock at $4 and days later watching it trade above $300. No big earnings beat, no blockbuster product, just pure chaos. That is exactly what happened with TechCreate Group ticker T, TCGL. And right now, US retail investors are asking one dangerous question. Is this the trade of a lifetime or the fastest way to blow up an account? Just a few months ago, TechCreate Group was a forgettable tech IPO, quiet debut, low volume, barely any buzz. The stock priced around $4, no CNBC headlines, no Reddit hype, no Wall Street love. Then suddenly, something snapped. In just a few trading sessions, TCGL exploded $8, $20, $80, $170, and at one point, an insane $350 per share. Let that sink in. This was a move of more than 3,000% in weeks, a move that turned small accounts into screenshots and late buyers into nervous wrecks. Now pay attention to this. The company itself came out and said we do not know why the stock is going up. Yes, the company had no news, no deal, no earnings catalyst. So why did this stock go parabolic? This was not fundamentals. This was not earnings growth. This was pure price action. TCGL showed classic meme stock behavior, sudden volume spikes, trading halts, social media chatter, FOMO buying, extreme volatility. On one day alone, volume jumped 4 times normal. Retail traders piled in, chasing momentum, hoping to flip it to the next buyer, and it worked, until it did not. This surprised Wall Street because Wall Street was not even watching. Here is the big red flag most people missed. No major investment bank covers TCGL, no price targets, no earnings models, no analyst calls. That means zero institutional support. When a stock like this starts falling, there is no smart money stepping in to stabilize it. It becomes retail versus retail, and someone always becomes the exit liquidity. Now let us talk valuation because this is where it gets scary. At the peak, TCGL was trading at 650 times price to sales and 2,500 times price to book. That is not expensive. That is detached from reality. The company makes around $1.5 million in revenue. It is barely profitable, yet the market briefly priced it like a tech giant. Now pay attention to this. Even during the rally, the company admitted it had no material developments to justify the move. That is when regulators entered the chat, NYSE scrutiny, SEC attention, the concern, possible market manipulation, social media-driven hype, artificial volume trading halts started appearing, liquidity dried up fast. And once liquidity disappears, prices do not drift down. They fall off cliffs. So what happened to late buyers? Many retail traders bought above $200, $250, even $300 because momentum felt unstoppable. But momentum cuts both ways. When sellers show up, stop losses do not fill halts. Trap traders, fear spreads faster than hype. This is how bag holders are born. So the big question is this. Is there still a trade here? Short-term traders might still see violent bounces. Moves of 30 to 50% can happen in minutes. But for swing traders and long-term investors, the risk is extreme. The RSI already screamed overbought above 99. That is not bullish. That is exhaustion. Here is what could happen next. Scenario 1. The stock fades quietly as height dies and volume vanishes. Scenario 2, another social media push sparks a dead cat bounce and then collapses. Scenario 3, TCGL is not just a stock story, it is a market psychology lesson. Price can detach from reality, momentum can overpower logic, and greed always shows up near the top. Early traders win big, late traders pay for the lesson. Final take, if you already made money, respect it. If you are thinking of buying now, understand this is not investing. It is speculation at the highest level. There is no shame in missing a move, but there is danger in chasing one. Looking ahead, TCGL will likely stay volatile, but without real earnings, growth, or institutional backing. This rally looks more like a mirage than a moonshot. So tell me in the comments, would you trade a stock after a 3,000% move, or is that exactly where you walk away? And if you want more breakdowns like this,